This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of little global fallout from the weekend election results. But first up today, we should note that American consumer inflation expectations for the year ahead slipped for a second consecutive month to be now 3%. That is progress from the 3.2% in May. The decline was broad-based over food, petrol, medical care and rent. 1 year ahead earnings growth is expected to match that at 3%. 3 year ahead inflation is expected to come in at 2.9%, and 5 year ahead expectation is now 2.8%. Both of these are improvements. Although minor, the Fed will be pleased with the shift because that means the higher rises in April and May were aberrations. And the expected rise in American consumer credit, that is consumer debt, in May came through. Although, to be fair, even if it was more than expected, it was a pretty modest $11.4 billion rise, up an annual rate of 2.7%. In coastal Texas, overbuilding and climate denial is catching up with them. More than 2 million people are without power there as Tropical Storm Beryl lashes the region. Notice not even classified as a hurricane anymore. Beryl has been the earliest ever named hurricane in a season that is upcoming. And China isn't immune to climate stress either. To give perspective to their response to the recent severe droughts in the north and floods in the south, they have just added another 3.3 billion yuan for disaster relief in the past 3 weeks. A little air seems to be going out of rising Australian housing markets, as an indication from their lending data shows. Owner-occupied loan demand fell 2% in May from April to be up 12% for the year. This wasn't the expected 2% rise. Overall, we should note a broad-based retreat by many commodity prices today. Mineral commodities are being led by rebar steel, which is down 2.8% today, to be down 5.2% for the month and 10.7% in a year. Copper and iron ore are off today too, although not as sharply as construction steel. Nickel is down too, but not zinc. Aluminium is holding. On the food side, we're seeing a sharp fall in wheat prices, and soybean prices are staying down. We get another look at dairy prices tomorrow morning at the next GDT Pulse event. The futures markets indicate whole milk powder will hold, but there is downside risk to skim milk powder. The US Treasury 10-year yield is now at 4.27%, and little change from yesterday. The price of gold will start today down $33 from yesterday at $2,356 an ounce. And oil prices are $1 lower at just under $82 a barrel in the US, while the international Brent price is down a bit more at $85.50 a barrel. And the Kiwi dollar starts today 20 basis points softer from yesterday, now at 61.3 US cents. Against the Aussie, we've slipped to 91 Australian cents. Against the euro, we're holding at 56.6 euro cents. That all means our trade weight index starts today at 70.5 and down a mere 10 basis points. And the Bitcoin price starts today at $56,063, down 1.6% from yesterday. Volatility over the past 24 hours has been high, though, at just on plus or minus 3.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.